What if I told you that the real secret to successful trading has almost nothing to do with finding that one perfect magical strategy? The pros, they don't have a crystal ball. Nope, they have something way more powerful. And in this explainer, we're going to break down exactly what that is. Okay, so let's just jump right in with the big, uncomfortable question. Why do so many people, maybe even you, lose money when they start trading? It's a super frustrating reality for countless traders who study charts, they follow all the news, only to just watch their accounts shrink. And here it is. This is the answer that changes everything. And look, it's a tough pill to swallow, but the market isn't really your enemy, your biggest obstacle. It isn't some invisible force or a rigged game. It's internal. It's you. So here's our roadmap. We're going to walk through 5 key areas that really separate the pros from everyone else. We'll start with the trader's real problem. Then we'll unpack the math of profitability, understand why risk is the only thing that matters, confront our own worst enemy, and finally, build a process for consistency. All right, first up, the trader's real problem. And the main idea here really is that most people are just completely focused on the wrong things. They're out there hunting for amazing strategies, but they're totally ignoring the foundation that everything has to be built on. See, the reason for failure usually isn't some bad strategy, it's a weak foundation. The pros build their entire careers on 3 pillars that amateurs just ignore. That's having a positive mathematical expectation, having bulletproof risk management, and disciplined psychological control. Without these 3, even the best entry signal in the world is totally worthless. And this slide right here gets to the heart of it. A single bad trade is not going to bankrupt you. But you know what will? A single bad trade that's way too big. The market doesn't take you out of the game. It's that emotional decision to chase a loss or to get greedy after a win. Those impulses, not the chart in front of you, are your real opponent. So let's get into the math of this. And this is where we kind of have to unlearn one of the biggest myths in trading, this idea that you have to have a super high win rate to be profitable. As you're about to see, that is a total trap. So the key concept is this thing called mathematical expectation. The easiest way to think of it is just the average profit or loss you can expect from your strategy over hundreds of trades. Now here's the kicker. If this number is negative, you are mathematically guaranteed to lose money over time. Period. Now this is where it gets really interesting, because our brains are wired to trick us here. Look at system A. It feels fantastic, right? You're winning 80% of the time. You get that constant little dopamine hit of being right. But notice the catch? That one loss wipes out 5 wins. Now, look at system B. This one feels awful. You're losing more often than you win. But when you do win, it's a big one, and it covers a bunch of those losses. This is how the pros think. So, which system actually makes you money? Well, it's not the one that feels good. It's system B. Even at that lower win rate, its mathematical expectation is positive. For every 10 trades, you can expect to make about $80. System A, with its amazing win rate, actually loses you $20 over those same 10 trades. And this is exactly why pros focus on their expectation, not just on winning. And that leads us perfectly into our third pillar, risk. You see, if mathematical expectation tells you if your strategy can win over time, risk management is what ensures you actually survive long enough to see those results play out. I mean, this quote really says it all. You can be a brilliant trader. You can follow your plan for months, just steadily building your account. But one single mistake, one time, where you risk way too much because you got greedy or scared, can wipe out everything. One mistake. So how do pros stop this kind of catastrophe from ever happening? It's one simple, non-negotiable rule. They don't risk 10%, not even 5% of their account on a single idea. They risk 1%, maybe even less. Now, this isn't about being timid. It's about being indestructible. It mathematically guarantees that no single trade, or even a string of 10 losing trades in a row, can knock you out of the game. And to get to that level of discipline, you have to make a really critical mental shift. You have to stop thinking about the money. Seriously. Obsessing over the dollar amount of a win or a loss is what fuels all those bad emotional decisions. So instead, professionals, they think in multiples of their risk, a concept they just call R. So you stop saying, I just lost $50. Instead, you say, okay, that was a -1R trade, which is an expected outcome. You also stop saying, yes, I made $150. And instead you say, that was a +3R trade, and it followed my plan perfectly. This simple little shift detaches your emotions and it turns trading into a game of statistics, not a game of feelings. And that brings us to the final and, let's be honest, probably the most difficult pillar, managing your own psychology. Because once you have a system with a positive expectation and you're managing your risk like a pro, the only thing left that can beat you is you. Ah, yes, these are the classics, aren't they? The self-sabotage behaviors. Chasing a loss with an even bigger, angrier trade. Moving your stop loss right as the price gets there because you just can't stand to be wrong. Cutting a great winning trade way too short out of fear. Or, my favorite, getting euphoric after a big win and immediately giving it all back. You know, the worst time to break your rules is often when things seem to be going your way. And that is why resilience is the ultimate skill. It's not about being the smartest analyst in the room. It is all about your ability to take a loss without flinching, stick to your plan without deviating, and just execute flawlessly, trade after trade, no matter what happened on the last one. That emotional discipline is what separates the top 1% from everybody else. So, how do we actually put this all together? Well, it starts by completely redefining what your goal is in the first place. This is the process of building true, long-term consistency. Look, the amateur trader's goal is to get rich and get rich fast. And that mindset, it leads directly to over-leveraging, to breaking rules, and eventually to failure. The professional's primary goal is totally different. Don't lose. That's it. Focus on preserving your capital first and foremost. Profitability is just the natural byproduct of playing excellent defense. Consistency isn't some event. It's a slow, deliberate process. It means having realistic expectations for your returns. It means accepting that, yeah, you're gonna make mistakes, but making sure they're controlled and small. And it means treating every single trade, win or lose, as a chance to learn. You have to respect the process, because in this game, survival is the ultimate competitive advantage. So we'll leave you with this final thought. Forget about finding the perfect strategy for a minute. Based on everything we've just covered, the math, the risk, the psychology, what is the one single rule you can commit to, starting today, to simply survive? Because in trading, the people who survive long enough are the only ones who ever get a chance to thrive.